books and tax prep. We make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. Dreamers close by and the ones far away. We create more than a course, we create a brighter day. A community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. Skills without borders, careers without limits, borderless accountants. This is what we're made for.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With U.S. books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course, we create a brighter day. A community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We built the
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With U.S. books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accounting. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it.
All right, guys. Good evening. How is everybody doing? All good? All right, so time check is 7:01. Let us start today's session with a prayer from Genji. Go ahead, Genji.
Let us put ourselves in the presence of God, in the name of the Father, the Son, the Holy Spirit. Amen. Heavenly Father, thank you for bringing us together safely today and for the gift of all this new day. As we begin our session, clear our minds of distraction and grant us wisdom, patience, and focus to learn and do our best. Bless our trainers, colleagues, and everyone participating. Help us support one another and make our time together meaningful and productive. Guide us in all that we do today, and may our work bring honor and glory to your name. We ask all these things through Christ our Lord. In the name of the Father, the Son, and the Holy Spirit. Amen.
All right, thank you, Kenji. All right, guys. So without further ado, so we can maximize our time today, let us start the quiz. Okay, so I'll enter the link in the chat box, and then I'm just gonna share with you now the right, last 1 minute. All right, guys, time is up. Good job. All right, good job. Both two Joshes on top, Josh, Shane, and Josh. Big round of applause to everyone. 4 people got the perfect score today. Good job, Marielle and Emerita as well. Quincy on the 5th place, Rena, King, Dearly, Kelly, and Sheila. Right. Very familiar names on the board. Good job, guys. We did better today, 71%, as opposed to 66%, I think, yesterday. So must have been a pretty easier quiz today, huh? All right. So let's review the questions to see if you guys or can help you guys learn from the mistakes that you committed. Okay. All right. So again, 71% accuracy. That's not too bad at all. Let's go with question number 1. You are adding Renee's W2 to the existing Whitfield file. What must you do first on the entry screen? So before you do input all her information, make sure that you're able to tick the spouse box. Okay. So that's to identify that that W2 belonged to the spouse and not to the primary taxpayer. If you don't tick on anything, that defaults to the primary taxpayer, just so you know. Number 2, the ProConnect W2 screen asks for an address. Whose address is it? That's the employer's address. Okay, so the employer's EIN and the employer's address. That's where I remember Josh pointed out yesterday because I made a mistake of inputting the employee's address instead. All right, if you could recall that. And number 3, Renee's box 16 shows 74,400, but her box 1 shows 71,200. Why the difference? So if you remember box 16, that's the taxable amount in the California state, right? So the California does not deduct the HSA of 3,200. As far as the state is concerned, it is a taxable income, okay? Number 4, Renee's box 14 shows CASDI or I forgot SDI, but it's something to do with disability insurance or yeah, state disability insurance. How is it entered in ProConnect? Most software has a dedicated line for SDI. Okay, so if we are entering box 14 and you see SDI, input that into the appropriate field, okay? Because it's very common in most states. Most state has state disability insurance. And for California, for this taxpayer that we are working on, they have one. So for both taxpayers. So what we did there was we input that in a dedicated field, right? If there is none, what do? Put it into others, okay? Number 5, on a W2, where box 1 and 3 are not the same, what should you expect to find? So you should be expecting that there will be amounts in box 12, okay? So that has something to do with HSA, 401k, or retirement contributions, okay? Some occasion, all those boxes are of the same amount. And if that's the case, It's a very simple, straightforward W-2 because there's not much going on. Okay. That's usually for small income earner taxpayers, or that usually happens when there's a secondary W-2, right? In the US, it's common for them to have multiple employers. So usually the primary employer will have all the deductions on box 12. And if there is a secondary employer, then that employer will have like 3,000, 5,000 wage, for example, then you would not see amounts usually in box 12, okay? Again, usually for secondary or tertiary employees or W-2s. So it's not uncommon for you to see multiple W-2s for a single tax, for one taxpayer. There's even one, or there's even two or three, okay? All right, number 6, box 1 of a Form 1099 INT goes to which line of the Form 1040? So it goes to line 2B, right, in the actual form. And 1A is the wage. And number 7, box 2 of 1099 INT shows an early withdrawal penalty. How is it handled, right? So it is handled separately. You don't net the amount, okay? You do not net the amount. You enter whatever was on box A and or on box 1, and then you input the amount on box 2 because that goes to, remember yesterday what schedule? It goes to schedule 1, right? It goes to schedule 1 as other deductions. Okay, and remember why that is the case, because we have to preserve the AGI. AGI is again the adjusted gross income. There is a reason we need to preserve the AGI, because it triggers one, the Social Security taxability limit, also the alternative minimum tax. Okay. Number 8, box 3 of a 1099 INT holds a US savings bond and treasury interest. How is it treated? So these interests are both taxable at the federal level, but they're usually exempt by the state. Okay. Even the interest from the IRS, right? Remember yesterday I shared with you a story where the IRS provide or give interest to a taxpayer whose refund has been due for a long time. They provide interest, and that interest is also taxable. Number 9, box 8 of a 1099 INT shows tax-exempt interest. What do you do with it, right? So even if it's tax-exempt, you would nevertheless enter it, okay? You still enter it in the schedule, in the tax software, and that goes into line 2A, okay? It reflects as a non-taxable interest. Reason for that is it may not be taxable at the federal level, but it could be taxable at the state level, okay? Remember, when you're entering tax return, you're not just looking at the federal, but also the state, okay? And most states in the US, there are income taxes, except for states like Florida, Texas. Those are most common state that does not have separate income tax return requirement, okay? So, but if you're preparing returns for California, New York, New Jersey, these ones are or require separate filing for the state, okay? So think of that all the time. Number 10, box 11 of a 1099 INT shows a bond premium. What does entering it do? Okay, so bond premium, it reduces the interest income. Okay, so we demonstrated that yesterday as well. Make sure that you don't skip that amount. Okay, if you skip that amount, you're overstating the interest income. Okay. So if you overstate the income of the taxpayer, you're also overstating the tax, right? Or minimizing or reducing the refund. Number 11, when is a Schedule B required? So that was presented in the slide yesterday. Interest or dividends are over 1,500. Okay. Number 12, ProConnect answers the Schedule B Part 3 foreign account question, no by default. And what should we do as tax preparers? We nevertheless ask a confirmation still from the taxpayer, right? And where do you typically see those questions? In the tax organizer, right? So the tax organizer would typically have a provision where we ask the taxpayer, did you have any interest in a foreign account, or did you have signature authority? And they should answer it with a yes or a no. Okay, we don't assume. Okay. And number 13, how could you tell that the Sierra Valley 1099 INT was a joint account? So it is clearly stated in the form itself. It indicates the name of the primary taxpayer and the spouse. That's a joint account. But if it's indicating only the primary taxpayer, that is a single account. That is for the taxpayer. If it lists only the spouse's name, that also belongs to the spouse only. Okay. Number 14, a client brings 4 forms 1099 INT from 4 different banks, and how do you enter them? So we tackled this yesterday. Multiple 1099 INTs, which are common, they have to be entered separately. Okay, they have to be entered separately. And last question, a 1099 INT shows 4,200 in box 1 and 900 in box 2. What goes in line 2B? So what goes to line 2B is still the 4,200 because we never net. Okay, we never net. We input both amounts in the tax software. All right. Otherwise, you guys did a fantastic job. 72%, I hope, or 71% now. I hope we can do better tomorrow. Okay. All right. How do you feel about your scores? You feel good about your scores today? Or you were still like, others are still getting the hang of Wayground? Some are still struggling with incorrectly choosing the wrong option, right? In a rush of time, and when you're using your mobile, sometimes your finger does not cooperate. Struggling with I'm behind 2 days because I need to recuperate from sleep deprivation. That's okay, Michelle. I'm also having issues with sleep lately myself. And I feel a lot better today than yesterday. Yesterday is really terrible for me. But I hope everyone's good now, and I don't think there's any more flooding in Manila, right? Has the rain subside? All right, so are you guys all good? Karine says 15 over 15, even though I'm not in the top 10. Right, maybe you answered pretty slow, Karine. So in our quiz, your speed also matters, okay? All right. Okay, so let's do a quick recap of what we have covered so far, guys. So you should be proud of yourself because you have already, by now, made yourself familiar with 2 income documents, right? And these are the W-2 and the 1099 INT. And also by now, you already are accustomed to Schedule B and what you exactly see in a Schedule B, okay? Also a Schedule D. What else? The dependents, the standard deductions. So there's a lot that you have already been made familiar with, and you can already actually prepare a basic tax return, right? Because basic tax return would include only a W-2 and maybe a 1099, okay? So, and I hope some of you have already started to play around your ProConnect, like play around, input different amounts, see what happens in your form. Do that at your own time. That way, again, you become more accustomed to navigating the software and get yourself familiar with um, how these numbers tie up. Okay. But if you're not comfortable because you don't want to overwhelm yourself, that's also okay. All right. Okay. So let me start our presentation today. Let me share my screen. And again, let's use ProConnect today. We'll be doing several simulation, same as in the past 2 days. All right, so welcome guys to our session 11. Tonight is line 3 and the form 1099 div. I want to set your expectation before we start. This is, in my experience, the most misread form in the whole of the tax document. Not the hardest, but the most misread. Okay, and we'll know about that in a few minutes. Now, 4 of its boxes are not what they appear to be, and each one produces a different wrong answer. So get tonight right, and you will catch errors that people who have been preparing returns for years still make. Okay, I also used to make mistake mistake in relation to this form when I was starting. All right, so where we are or what we have done so far, line 1A on the form 1040, and then line 2B for the interest. We've also covered Schedule B, and what we're going to cover tonight is the line 3A as well as the line 3B on the 1040. We'll talk about what makes a dividend qualified, and then what is a capital gain distribution. And then we'll also cover foreign tax paid. Okay, I intentionally include foreign tax paid because I feel like we have a lot of time today, same that we had yesterday. So we'll cover Form 1116 today. All right, so this is how we're going to be allotting our time. We'll talk about the 1099 div, and in details, the ordinary dividend, qualified dividend, and other boxes in the 1099 div form. We'll also again cover foreign tax paid, and then we'll do the ProConnect lab afterwards. All right, so form 1099 div, what you typically see in that form. So you will first have the line 1A, which is the total ordinary dividends. So if you have the 1099 div from, I think, let's see what that pay was for the Whitfield. So if you have your income document open, that should be the 1099 div from Redwood. Okay, so these are the amounts that you can see on that tax document. 1A would be the ordinary dividends of 2240, and then on line 1B, you have qualified dividends, a slightly smaller amount of 1980. So you now have 2 dividends, ordinary and qualified. Question is, are those 2 dividends separate income? Right? So do you have 2 dividends here? The 2250 and the 1980, or are they supposed to be added together? So that's a question that we're going to be answering today. The capital gains, we'll also cover that. Unrecaptured Section 1250 gain. This is related to real estate funds, not very common at all. Non-dividend distributions, I see it occasionally. And then you have Federal income tax withheld, very rare. Same with interest or the 1099 INT. Most brokers or banks do not withhold taxes on either interest or dividends. And then Section 1998 dividends. This is related to REIT or real estate investment trust. And then one we're going to talk about is the foreign tax paid that will be reflected on the Form 1116. Okay, so if you read the box underneath, it says Redwood shows 2240 of ordinary and 1980 of qualified. Total income is 2240 and not 4220. Okay, so they do not add together. So just a portion of the 2240 is qualified, which is taxed at a different rate. Okay, so adding them is a single most common dividend error, and it nearly doubles the income on the return. So if we add them together, in that case we are overstating the income of the taxpayer. All right, so we'll talk about those boxes. So if box 1B is not extra income, what is it for? Is it for the rate? Well, ordinary dividends on line 3B. Every taxable dividend the fund paid. So that's the taxable dividend at the ordinary rate of up to 37%. So how many dividends do we have for this taxpayer? I think it's only one. Okay, there's only one. So there's two. If you may get confused with the 3650, because there's another dividend that will be shown on the Meridian Brokerage consolidated broker statement, right? But we're not gonna cover that today. So we're only gonna be covering the first dividend of how much was it? 2240. Okay, but the total dividend for the taxpayer is 3650. All right, so the qualified dividends is a subset of the ordinary dividend. So a portion of the ordinary dividend. It is qualified when it meets a holding period test. Normally, these are dividends that are issued by US or paid by US corporations and qualified foreign corporations. So we're not going to talk on detail as to what qualifies as US corporation or what qualifies as a qualified foreign corporation. You can research that at your own convenience, because these are normally provided already in the 1099 div. Okay. And there's a breakdown of how much are paid by US corporation and how much are paid by qualified foreign corporation in most tax document. Okay, so you just need to know what is it. So qualified dividends are taxed at a lower rate. So some are 0 rate, some are 15, and some are 20. So in the case of Whitfield, because again, there are two dividends, the total qualified dividends is 3185. So what is worth knowing here, the Whitfields are around at 22% tax bracket. So their qualified dividends are taxed at 15%. So if we don't classify dividend as qualified, the entire dividend will be taxed at 22%. Okay, so the entire dividends will become taxed at 22% rather than a portion of it taxed at 15% and the rest at 22%. Okay, so if we make that mistake, the taxpayer will actually lose about $220 in tax savings. Okay, so what I mean is, if we only enter ordinary dividends and we do not enter qualified dividends in the tax form, that results to a loss of tax savings for the taxpayer. Okay, so we will demonstrate that very shortly, guys. once we start entering the numbers of our tax form into our tax software. Okay, but for now, let's talk about the theories. So that's ordinary dividend and qualified dividends. Okay, let's move on to the next slide. Now we talk about capital gain distributions. So these capital gain distribution is always treated as a long-term capital gain, regardless of the number of months that the underlying securities were held by the taxpayer. And this one goes to Schedule D, which we will show you later as well. And it never touches the 8949. The Form 8949 is related to 1099B for brokerage transactions. We will cover this tomorrow. Okay. So just one thing you remember, this capital gain distribution is a long-term gain. And what else do you need to know here? Let me see. All right, we will demonstrate this more later when we start entering the information in the tax software, okay? And then non-dividend distribution, this is a non-taxable income. Sorry, this is not even considered as income. So this is purely informational. What it means is this is a return of the taxpayer's own capital. So what happens here is, for example, the taxpayer is invested in a mutual fund, okay? So he withdraws a portion of his capital from that mutual fund. So that withdrawal is not an income, but a return of his capital, therefore non-taxable. All right, what happened there? So, but what it does is it reduces its basis on the fund. Okay, so it just reduced the basis. It's purely informational, but we still input that because some taxpayer, they track their basis separately on their investment. Okay, because if they don't track, the problem is when their fund grows, right? Like, for example, they started to invest 10,000, right? And then they start to earn from that fund. So whatever they earn, they reinvest it back into the fund, right? They don't withdraw. So they have to track the 10,000 basis, right? Because when they withdraw, anything that goes beyond the basis. So for example, they withdrawn over time 11,000 already. So their basis was 10,000, but they withdrawn over the years already 11,000. What happens with the 11,000, the 1,000? It becomes a taxable distribution, okay? Because it no longer is a return of capital, okay? Because the capital has already been fully returned, right? Because capital was only 10,000. So for taxpayers who are earning much and are really into investments, they track their basis so that they don't over withdraw from their funds or from their capital, okay? All right, so with that, let us open our software, and I also like you to open the tax document so we can input this into our tax software. All right, so if you played around your software, just make sure that whatever it is that you entered outside of our discussion, that you have deleted those so that when you compare what I have versus what you have, we have the same numbers, okay? Because if you have different numbers, it may be hard for you to follow, okay? And make sense of the numbers. So that's why I said yesterday that if you want to play around, create a copy, okay? don't mess up the numbers that we're doing together. All right, so let me just share also the form. All right, so this is our tax form, the 1099 div. And again, you want to make sure that you're looking at the correct year, okay? So for this 1099 div, this is clearly for the year or for the tax year 2025. This dividend was paid by Redwood Index Funds, and this is the payer's EIN, and this is a joint account, right? A joint account. And then all the numbers here, we will be entering those into the tax software, okay? So let's do that. So for example, if you're in ProConnect and you don't know where to go to input the dividends, you go to income section, and then you see here a section called dividend income or 1099 div. Click on it. And then best practice, just click on details, okay? So that you get to see the entire input form. So again, rule of thumb, just copy and paste, okay? Don't type. So we'll copy the payer's name, and then the payer's EIN or payer's TIN. They are pretty much the same. And then we would identify that these are for both spouses, right? The income is for both spouses. And then you want to copy box 1 into 1A. So you should not make a mistake here because it's clearly labeled, right? Ordinary dividends. I'm seeing. One second. All right. So you should not make a mistake here because these are clearly labeled, right? So 1A, ordinary dividends. Also here, 1A, total ordinary dividends. It will always look like this, okay? So you cannot make a mistake. Also for qualified dividends, it's also labeled exactly as it is in the tax form. So this is true for all software, okay? So matter of just copying and paste. Okay. Capital gain distributions also clearly indicated in the tax software. And then non-dividend distributions, see here, box 3. So make sure that when you're entering, you look at the label, okay? And you look at the box number. So you don't make incorrect entries. So you don't want to be putting non-dividend distribution into any of the fields in 2B, 2C, or whatever, okay? So that's it for this tax document. Now what you do, if you refresh your form, you should see this in Schedule B, right? So you will see that in Schedule B, you have 2240 as ordinary dividend, and that also goes on the form line 3A in your 1040. So 3B, 2240, qualified dividends on box 3A. Okay, I'm not sure I'm seeing 1000 here. Was this 1000 in the form or with part of what we just played around? Do you recall? In the 1099B that we had yesterday, because we want to follow strictly our tax form. Let me check our 1099. All right, so it was not included. Okay, so let's delete that because that's not part of the 1099 INT form that we used yesterday. It was just, I think, a demonstration of what if there was a bond premium, right? So let's remove that because this was just purely for demonstration and not related to our taxpayer. Okay. So if you refresh your form, we should exactly have the same. Okay. So Schedule B should have 1845 of interest and 2240 of dividends. All right. Is it too small for you guys? I don't know if I can. Let me see. Okay, I can zoom. Is this more visible or? Oh, okay, actually. Sorry. Is this better, Michelle? Okay, so that's your dividends, and let us make some mock entries. Okay, so if we go back to our table of contents here, so dividends. So let us demonstrate if we made a mistake of skipping 1B, what happens? Okay, if we made a mistake of not considering 1980 in our input because we're not being thorough. Let's just take a snapshot of our tax so far. So take a look at your tax on line item number 16. It's now saying 9,336. Okay, that's the calculated tax in the tax software. Okay, so remember that number. Can anyone put that in the chat? 9336, so that we can determine what the impact of our blunder would be on our tax form. So what if we have not been thorough? We skip line 1B for qualified dividends. How will it impact our tax form? Okay. So if you go to line 16 again, that has now gone up to 9,576, right? So there is more tax. There is more tax than what the taxpayer should or is supposed to pay. So what is the difference between 9,576 minus 9,336? It's about $240, right? So 240 of extra tax, unnecessary. Why? Simply because you were not being thorough as a tax preparer. Okay. Because what happens here is that the entire 2240 of dividends is now taxed at the 22% tax bracket of this taxpayer. Okay. Remember that qualified dividends is taxed at a lower rate. In this case, in their case, is at 15%. Okay. So that qualified dividends was taxed at a lower rate, and whatever is the difference between the qualified dividends and the ordinary dividends, that's the only amount charged or taxed at the 22% rate. Okay, makes sense? So if we go back to qualified dividends, how much was that? 1980. Okay, so you don't want to make a mistake of not being thorough, just saying, oh, they're just the same dividends. Why not? Why bother enter? Okay, so you may not be aware that actually has an impact on the tax return of your taxpayer client. Okay, that's why we have to be thorough. Make sense so far? All right, so that's your 1099 div. We're gonna cover capital gain distribution and non-dividend. I told you earlier it's not relevant for tax purposes because it's just for basis monitoring, and this is not an income but a return of capital. Okay, so time check is 7:54. Let's go on an early water break so that by the time we come back, we will cover capital gain distribution. Okay. All right. Are you good with that? All right. Let's see each other in 5. Thank you, guys.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With US books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course. We create a brighter day, a community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We build the finance and tax prep. We make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without.
All right. Welcome back, guys. Alrighty. So where did we stop? Qualified dividends, right? So let's now cover total capital gains distribution. So your total capital gains distribution goes to Schedule D, and also on this line, 7A in the Form 1040. So you can see that there, 865, okay? Because that capital gain distribution is a taxable income, okay? So you do not skip that. Otherwise, it's gonna also incorrectly report your taxpayers' total income. Now, there's one thing that we missed, guys, when we were setting the tax return. If you go back to the 1040 from the prior year and also in the tax organizer, remember there was a prior year carryover, right? Capital loss carryover. So we should be entering that. So do you remember how to do that already, correct? All right, so if you guys are new to entering the carryover, what you do is you go to dispositions, right? So dispositions over here. So best practice, when you're setting up the return, you already input the carryover, okay? Which we did not do. So we did not do the best practice, but we should have done it, okay, from the very beginning. So we don't forget about that. So once you're in your quick entry for disposition, click on carryover. And then we had a long term, right? How much was that? If you guys have the tax organizer or the prior year return open, how much was the carryover loss from prior year? 38. All right, 3,800. So we put that both on the regular and on the alternative minimum tax. Okay, so when you do that, you refresh your form, we should have a Schedule D on our form, right? So now you're seeing Schedule D, okay? Now on your Schedule D, you will see two things here, your carryover and the capital gain distribution on line 13, 865, right? So they're now netted. They're now netted at 2935. So on your 1040 return, page 1, 7A should now be 2935. Reason for that, again, if you want to see a breakdown of that number, the form will actually tell you, right? So 7A, for example, this is capital gain or loss, attach Schedule D. So if you want to get more information about this number, just go to Schedule D, okay? So it will tell you where that number come from. So that total 2935 was your capital gain distribution this year and your long-term capital loss carryover from prior year. Make sense? So imagine if we did not input our carryover loss, we would have our entire 865 capital gain distribution taxable, right? So we lose that ability to reduce the taxpayers' tax. So now tax is down to 89.88 from what it was earlier, right? Because if you took it out, so anyone can type in the tax due right now, line number 16, 8988 on the chat box, please. Just so we can refer to that number. So if you refresh your form, because we're just saying we forgot to input the carryover, right? So the impact of that on our tax return is our tax would be 9336. So 9336 minus 8988, how much is that? $348. So that 300, thank you, Neil. That 348 is extra tax, unnecessary, right? Simply for missing the carryover loss. Make sense? 348, that's a lot of money, guys, in Philippine context, right? It's not small. It's a significant amount of money. Okay, so make sure that, again, you don't forget to do your carryovers, because it helps your taxpayer pay the correct tax. Okay, so 9336, it should now go down to 8988. Makes sense, guys? So it helps to be thorough. Okay, it helps to be thorough. It helps. It helps that you don't miss out key information from prior year return. Okay, and also now that you're entering these numbers, you're now able to relate it to how much is the tax that's being calculated for your taxpayer, right? So again, you're not just simply entering the numbers from the tax document to the tax software, but you understand the impact of these numbers into the bottom line. What is the bottom line of your of what you do? Calculation of the tax due or refund, right? So now you can make sense, like, after everything is done, it makes sense to you why there is a huge tax due, why there is a tax refund, or you can make sense to you, like, comparing your current year return versus prior year return. You can make sense that, oh, the numbers are pretty consistent, right? So you will have the ability to review your own work and not just, leave it to the reviewer to review your work. Okay. Copy so far? All right. So that's for capital gain distribution. Okay, so you don't worry about it. I saw a question earlier about the 15% for qualified dividends. That's actually a given. Okay, and that computation depends on the level of income of the taxpayer or the corporation that pay the dividend. Okay, and we don't worry about it, right? We don't worry about that percentage because the software and the document will give us that information. Okay. All right, so let's continue with our presentation today. Now, so the foreign tax credit. So we're doing assumptions here, okay? This is not an additional document. We are going to do these mock numbers into our Wheatfield taxpayer, but we will later on delete them, okay? Because this is just purely for a demonstration. This is not an additional document that relates to Whitfield. Okay, so this is a form that we just invented only for tonight. So suppose that we have a 1099 div or a second 1099 div with this information. So you have on your box 1A an ordinary dividend of 8,400 and a qualified dividend of 7150, and a foreign tax paid of 512. Okay, so it's not all the time, guys, that all these boxes will have numbers. Okay, most of the time it's just these two, right? Most of the time. But there are occasions where you will see foreign tax paid, you will see non-dividend distribution. It could be a combination, but it's very rare that you will see every boxes filled. Okay, but what matters is that for any box that you see on the document, you input that into the tax software. Okay, so for this exact scenario, we have 512 of foreign tax paid. And let's see how that impacts our taxpayers' return. All right, before I go with this, let's just do that. Let's just enter that information into the tax software. Can anybody screenshot this portion? Just the payer, all box 1A all the way to box 8, and put it in the chat box, please. Because I don't have a separate document for this, because again, we just did it through we just have it on the slide. It's not a separate document. All right, and then let's open our tax dome again, or sorry, tax software. So we already have one scheduled, we already have one 1099 div. So let's add another one. Okay, let's add another one. Let's put it on row 2. All right, so let's just say this is XXX company, for example, right? Because this is just purely demonstration, okay? So let's just input the amounts. Okay, so the amounts are, how much in box A again, guys? I am not seeing the screenshot. 8,400. Okay, so this is 8,400, and then our qualified dividend is 7,150, and then foreign tax paid should be somewhere over the on the lower portion. Okay, so foreign tax credit. Now, for all foreign tax paid that relates to interest and dividends, they are passive, okay? A passive, or otherwise known as unearned income, okay? So when you select a category, make sure that you select passive category income, okay? No other item here. Don't worry about all the other choices. It's not common at all. I have not encountered those. So make sure just to create or select this item, passive category income, because this relates to dividend. And again, dividend is a passive income, not active. Okay. I think you should. All right. For the country, it's specified here as various. So some dividends or foreign tax, they're associated with a specific country. Very rare though, very rare. But most of the time it's various countries. So what you do is just type in various. I think, yeah, there is an option here to select other country or various. And then for now, let's leave this portion blank. Okay, let's leave this portion blank. Normally in your tax document, this would be provided, like how much of that dividend was foreign. Okay, how much is considered ordinary dividend foreign and qualified dividend foreign. Okay, so not all ordinary dividends are foreign. There could be a portion of it only. Okay, so for now we don't have that information, so let's leave those blank. So let's say, for example, in our case, we had 512 of foreign tax paid. So we put that number here. And then because we are referring to a 1099 statement, we tick this box, the 99 taxes, okay? And for the date paid accrued, we always put the last calendar or last date of the year. So 12/31/2025, okay? Purely administrative, guys, or yeah, administrative purposes. This could be any date, like the actual date that you see in the document. But if you don't see that date there, just put 12/31/25, okay? Then from here, refresh your form. All right, so what you see, you now have form 1116, right? So form 1116, it relates to foreign tax paid, right? So what you see here is that 512 will now be applied as a credit, right? So don't worry about this computation. What you have in 1116 is a detailed breakdown of how much was considered to be foreign income and how much tax was paid for that foreign income and the related calculation for the credit, okay? Because not all foreign tax paid can be applied as a credit. It depends on the level of income. So sometimes it's 100%, sometimes it's a percentage. So if it's not, like, if there was 1,000 of foreign tax paid, but only 500 was used for the current year, then the other 500 would be a carryover for the following year. Okay, so there is a limitation, and we'll cover that later. So not all foreign tax paid are necessarily applied as a credit. There is a limitation. Okay, so in this case, the 512 is applied, okay, as a credit to our return. And how do you prove that? You go to your form 1040, and then you look at line number 20. You see here, amount from Schedule 3, line 8, 512. So 512 actually is a deduction of your tax. So your tax is 9,138 minus 512. So your tax now becomes 8,626. Okay. So credit is a dollar for dollar deduction against your tax, calculated tax. Okay. So if you look at Schedule 3, right? So Schedule 3 is another schedule, right? Yesterday we had Schedule 1 for that 1,000 bond premium, right? Or no, 900. The 900 amount that we use as, what was the 900 for? I forgot. What was the premium, right? The bond premium. Oh, sorry, the early penalty. So sorry. Good job, guys. So the early withdrawal penalty from the certificate of deposit, but that was a mock number, right? So we saw that in Schedule 1, second page, because you know that in Schedule 1 is the first page is additional income, and the second page is the additional deductions. So now we're introduced to Schedule 3. So what is Schedule 3? If you take a look at that, so Schedule 3 will have additional credits and payments, not deductions, not income, but credits and payments. Okay, so line item number 1 is the foreign tax credit. Okay, so all other credits will be reflected here. Okay, and all other payments that relates to this taxpayer would also be reflected on Schedule 3. If this schedule is empty, then you would not see the schedule in the tax software. Okay, so remember what I said. You don't worry about the attachments. You don't worry about the schedule, because they will auto-populate as soon as you enter the relevant information. Okay, you don't even have to memorize them, but for you, you have to be familiarized. You have to be familiar with them. Okay, so your 1116 is a breakdown of your foreign income and the foreign tax paid and the related calculation. Right now, if you see here, it's a complex calculation, guys. So I don't want you to worry about it. But just so you know, that credit is shown as a deduction of your tax calculated the calculated tax. Okay, dollar for dollar. Okay, so let's go back to our presentation. So now let's introduce the concept of credit versus deduction. Okay, so credit, when you talk about it, it comes off the tax bill, again, dollar for dollar. So 512 is a deduction of your tax. Sorry, is a, I don't want to say a deduction, is it comes off out of your tax. But if you say deduction, it comes off on the income, right? So deduction to income, right? It's not a dollar for dollar. So if that 512 was a deduction, that would only save the taxpayer 22%, because the 22% is the tax rate for this taxpayer. So this would only this amount of 512 would only save the taxpayer 113, right? So that's the difference between the deduction and credit. When you say credit, it comes off straight out of the tax, dollar for dollar. Make sense? Because you will encounter this a lot, right? You will encounter this a lot. Credit is so much more important than deductions. So you can miss deduction, but please do not miss credit, okay? Because it will impact significantly the amount owed or the refund of your taxpayer client. All right, so do you need Form 1116? So not all the time, okay? So when the foreign tax is 300 or less, if married filing separately or single, or 600 if filing jointly, that 1116 can actually be elected out, okay? But in practice, we don't really do that. We don't elect out 1116. But in case you want to know how to do that, like you don't want your tax form to have so many pages when they're printed, I can show you. So if you want to elect out of 1116, this is how you do it. Sorry. So what you do is you go to credits and then Form 1116. And then click on General Info/Elections. And then see here, elect not to file Form 1116. Just type in one over here. And then refresh your forms. So your 1116 is gone, right? Your 1116 is gone. So when you print this return, you would not see the 1116, but you would still see that foreign tax credit over here, the 512, okay? And you would still see that as a deduction overall on line number 20 on the Form 1040. But the 1116 itself is not printed, okay? So meaning you're electing out of attaching the Form 1116. All right, so let's not do that. Remind me later, guys, before we end, to have you screenshot, or first I have to delete all the mock information that we use and then allow you to do a screenshot so that when you do your own or you're able to, if you're trying to follow along using the recording, you'll be able to compare your figures with my figure, okay? All right, so let's go back to our presentation. This could be a very good interview question, guys. When I'm interviewing for a tax preparer role, I would ask, what's the difference between a credit and a deduction? So, you know, try to put that in your head, because not a lot of people can very well explain the difference between the two. Okay. All right. So if you are wondering how that 512 came about, why were we able to deduct 100%? The simple calculation was this, right? So that's why I didn't want you to get yourself overwhelmed with the Form 1116. But the most basic way to approach the calculation is whatever was the US tax on the Form 1040 multiplied by the foreign income divided by the total income, right? So that's the most that one can claim. So in our example, these are rounded off numbers, okay? These are rounded off numbers. So the 9,600 is the calculated tax for the taxpayer, okay? The 9,600. It not exactly 96, I think 91 something. Multiply by 84 was the foreign income, right? The foreign dividend. Now divided by the total income of this taxpayer. Again, a rounded number. So US tax multiplied by whatever is the foreign income divided by the total income. So whatever is the resulting number, compare that with the foreign tax paid, okay? So if the foreign tax is lower than the calculated amount, you're able to deduct everything as a credit, okay? You're able to take 100% of the foreign tax paid. If it's more, let's say if this is 1,000, right? If the foreign tax paid was 1,000, that 1,000 is limited to only 840. Okay, the excess will then be carried forward to the following year. Make sense? So that's how it works. The essence of what 1116 does, this is it. It's more a simplified approach, okay? And really, you don't have to make yourself understand how the 1116 work because, the software does it for you. But you want to understand it much better, right? Much better. I did try to understand it when I was taking the EA exam because I thought it was going to be part of the question. I didn't come across a question related to 1116 though, but I tried to understand it nonetheless, and then I forgot about it after. Because when I do tax return, I just make sure that all the necessary entries are entered. Okay, because missing entries in the tax software from the tax document, that means all the calculations in the software is wrong. Okay, because the numbers that were entered were either incorrect or missing, right? Or the relevant information or data were not entered. So again, the resulting calculation would be consequently incorrect. All right. So we already showed you the election. All right, so there's a downside if you are electing out of 1116. So no 1116, that means if there was a carry forward, you lose that, right? You lose that carry forward because you elected out of that form. Okay, because the IRS will not see that in the tax form that you're submitting, right? So in the case where the foreign tax paid was 1,000 and you're only able to claim 840, you lose the difference, right? You're not able to carry forward that on the following year because you did not file the 1116. Make sense? So electing out may not be a real. That's why I don't see this, right? I never seen in an experience that we elected out of 1116, but it's a good thing to know. Okay. So for the credit, what you can tell your client is that you already paid tax on this money once to another country. What the credit do is that it stops the US government from taking or from taxing the same income twice. Okay, so there's no double taxation. So that's why it matters for you to thoroughly check tax document for tax credits because the US has a lot of treaties in multiple countries, right? So remember our example, Sophia, the wife of Marcus. If she files as a dual resident, then she would not get tax credit, right? Because what happens is she's a non-resident alien in the US. She should only report her income in the US, okay? But if she elects to file as a resident alien and files along with Marcus as married filing jointly, then her income in the Philippines in January and February will be declared in the tax return of Marcus, right? And if she paid taxes in the Philippines for those 2 months worth of income, she can claim a foreign tax credit because the Philippines and the US have tax treaty. Okay, so she can apply a tax credit, and then there will be Form 1116. Make sense? So there's no double taxation. Sophia is effectively not taxed on the same income twice. All right, so we have just entered that 1099 div. Let's do a quick review, guys. So a 1099 div shows box 1A of 2240 and box 1B of 1980. How much dividend income goes into the return? Is it A, 4220? Adding the two boxes together, is it 2240 in line 3B with 1980 also shown on line 3A as the part tax at capital gains rates? Or is it 1980, which is only the qualified portion that is taxable? Or is it 260, the difference between the two boxes? All right, so everybody got it right. The answer there, again, is letter B. We have to enter both. The 2240 will show in line 3B, and the 1980 will show on line 3A. So that is this demonstration here. If we're gonna go back to our tax return, and then before we do that, let us just make sure that we delete the dividend that the extra dividend that we entered, right? So this one we can delete. So that's the only one we change, right? So what it refers to was this one. So 3A, qualified dividends, 1980. Line 3B, ordinary dividends, 2240. Okay? So this is the time, guys, you need to screenshot the page. This is where we have come up so far. Line 1A would be a combination of the two W-2s. Line 2A would be the interest from the 1099 INT that we had yesterday. And just today, we had the two dividends, qualified and ordinary, and then the capital gain distribution, right? Which took out a portion of the carryover capital loss that we had from last year. So when you're working on the documents that I have shared with you so far in Google Classroom, this should tie up to this AGI. So this is your AGI, or your adjusted gross income, a total of 119,942. And if on your page 2, you should have the standard deduction, 33,100, because the other taxpayer is above the age of 65, and then the additional 6,000 deduction for being 65, for being older than 65, and then the calculated tax so far based on their income, and then they had enough withholding. Okay, a little too much though, a little too much for their income level of 13,120. So in this scenario, if they only had these documents, they only had W-2, they only had interest and dividends, they would have a refund. right, of 4,132. The reason for that is because they paid in advance the IRS this amount via the withholding, right? The withholding that their employers did on their wages, but they only owe 8,988 before the IRS. So the IRS will give him back 4,130. So in this case, there was over withholding. Okay. But we do not conclude that it is over withholding just yet because there's other income, right? This will change because there is retirement income later on. There is income from other documents such as the consolidated broker statement. There's even an unemployment income as well. So that's just it for now. And do you see this common? Yes. You will see a lot of taxpayers who would only have a W-2, a 1099 INT, and a 1099B, right? So as of today, you can already prepare a basic tax return, guys, and read a little bit of it, right? Read a little bit of it. All right, so I guess that's about it. Let's see, our presentation, I think that ends on this slide. Let's see. All right, so our takeaways, box 1A goes to line 3B and box 1B goes to line 3A. So these are for the qualified dividends and the ordinary dividend. We never add both, okay? Qualified dividends, they are taxed at the capital gains rate, which is a lower rate than the ordinary tax rate of the taxpayer. Box 2A, capital gain distribution, it goes straight to the Schedule D. And non-dividend distribution, this is a return of capital, not income. They are not taxable, but they reduce the basis. And we covered the foreign tax credit. And again, a credit is different from deduction. So the credit here, or according here, a credit beats a deduction roughly 4-1, right? So imagine that difference. And then no Form 1116 if the income is passive, reported on a 1099, and the tax is under 300 to 600. Okay. So tonight we've talked about dividends, Schedule D. Tomorrow we're gonna cover more of Schedule D, right? But this time there will be an actual sale of stocks. Okay. So we're gonna talk about the broker statement or a 1099B. Okay. Alrighty. So I guess we have time for Q&A. Let's go through your questions, guys. You're done doing the screenshots, guys, right? I don't need to go back to or let me expand this so that you can make a better screenshot. 1 second. So if you want a screenshot of this form, this is page 1 of your form 1040. Right? So page 1, and then, all right, so you should be screenshotting now, and then I'll move to page 2. So this is your page 2. If your numbers are not the same, then there's likely an error with your entries. Okay. All right. So all right, so Q&A. Let's go through the very last from Kiko. Chris, if we are done, can we go back in doing the Schedule D? It is showing differently on my part. Maybe I missed something. Only if we have other time. Otherwise, I'll wait for the recording. Maybe you can do a screenshot, Kiko, of what you have on Schedule D. We can already tell. We can quickly tell what you missed by sending your Schedule D. I didn't follow or understand why there is a need to also encode 3800 under AMT in the loss carryover part. AMT is something that we will cover in some other section in the future, Jason. Okay, so let's not worry about it for now. Okay. If the foreign income tax withheld is a foreign currency and as for ProConnect, it cannot auto-convert the amount. So an entry is set to mandatory in dollar. Then what's our basis? Good question. So I think this was asked some time ago already. If the foreign tax is paid not in USD, we use the treasury rate from the Bureau of Treasury. There is a website that we go to that we can get the average rate. We take the average because the rates fluctuate over the years, right? So we take the average rate from the the US Bureau of Treasury. Average, meaning from January 1 to December 31 of 2025. So we take the average number. Okay. All right, so do you have a screenshot of slide number 9 so you guys can share your screenshots? Is it safe to say credit, reduce tax amount, deduction, reduce taxable income? Yes, that's a good way to put it. I think tax rate will zero out the taxable income while deduction does not. It could also be put that way, Shirel, but I think the way Lawrence put it makes a lot, made it easier to understand. Good job, Lawrence. Let me just go through some questions that I may have failed to address, guys. And some of you have been, this is what I love about you guys. Like some of you are chiming in and answering your classmates. Good job. Just to clarify, for capital loss on second year, we do not need to cap it for 3,000. It's still capped. Every single year, loss is capped at 3,000. Okay. And it's automatic. The system will automatically cap it at 3,000. Okay. In this case, it's only about 2,800 something because that was reduced. The 3,800 of capital loss carryover from prior year was reduced by the capital gain distribution of about 800. Okay. Right. So the 800 of loss would have been carried forward to the next year, but because in our case, it was offset by the capital gain distribution on the 1099 div. Right, so that question of Sadami, that's already answered. All right, so I guess we're good. Let me scroll down. I'm not seeing your screenshot, Kiko. It's too small. All right, so we have time. Let's accommodate Kiko. So in your Schedule D, if you go to Schedule D, if you have a different number, so there's only two things in Schedule D, remember? It's the capital gain distribution and the capital loss carryover. So if you had this, either of the two incorrectly inputted, then you will not have the same number. So what was the case for you, Kiko? Again, maybe because I'm not seeing your screenshot. Okay, I can see it now. Okay, so you did miss the carryover. Okay, so you already know how to do the carryover, right? So all you have to do was go to income under disposition, okay? And then from there, you will see this section, carryover. Okay, do not forget this. Some software, they work differently, okay? This is ProConnect, but it's not the same way in other software, but you still should have looked for it, Okay, so this is the beauty of tax, right? Even if you're using different software, for as long as you know the principle, right? When you're looking at the prior year return, you see, oh, there is our carryover. And if you're new to the tax software, you don't know where to go to input that carryover, there's ChatGPT, guys. It's going to give you a step-by-step process on how to input that carryover into your tax software. And how will you know if you entered it right? Right? How will you know if you entered it right? Just go to Schedule D. Okay? If it comes into the right section, which is line 14, then that means you entered it right. If you did not enter it correctly because you input it in the wrong place, then it's not going to come up here. Okay? So that's how you will appreciate understanding the why, because the how will come after. Okay? Because if you're just, again, literally doing data entry in doing tax preparation, you may miss these things, right? Because you would not bother to look at prior year return. What you would do is just go to the tax document and then start entering those into the tax software, and then check if everything is entered into the tax software, and then make the mistake of forwarding the return to the reviewer without even knowing how to review your work. Okay, so if you do that and you continue to do that, that will set an impression on the reviewer that you really do not know what you're doing. Okay, and you may be able to get into the job, but the question is, are you going to be able to keep your job? Because if you're going to continue to perform that way, that will show that you do not know exactly what you're doing and that you need more training, and you may be let go. Okay, you may be let go. And for some firms, they may need you at the data entry level during the busy season. You may be lucky to get in because they need help during the busy season, but retaining you after the busy season may be a question, right? Especially if the quality of your work is not within the expectation. But if you exceed expectation, you may get I would say you may be absorbed, right, by the firm, because you know what you're doing, and a reviewer can tell, right? A reviewer can tell if you know what you're doing, because you're not gonna miss on important things. Okay, you're not gonna miss on important things. If you're a newbie and literally doing data entry, the reviewer can also tell, right? I can tell, like, oh, this guy's new to tax prep. Even when I'm interviewing, I ask questions, right? Like, what if, I remember one interview I did very recently. I just asked him, what for you is a complex return? And he said, every time there is a 1099B, I find it complex because I need to input a lot of stuff. And so because he mentioned Schedule B or 1099B, actually he mentioned a consolidated broker statement. So and so it triggered me to ask him about foreign tax credit, right? And so I asked him, all right, if there is a foreign tax credit, what is the form that's going to be associated with it? Like, how do you know how much was applied onto the tax return? And he wasn't able to answer me. Right there, and then I can tell that this guy, although he was doing 7 years, right, 7 years of tax prep, guys, does not know what an 1116 is, right? So that's a pity, that's a shame. And he thought he's already senior level, right? He started way longer than me, right? He was started way longer than me. So I was so interested to interview him because I was looking for someone to replace my role. Okay. So I was looking for someone a lot better than me. So when I look at his resume, 7 years was no joke. I said, oh, this could be the guy. So I get so excited. And first 10 minutes into the interview, I already know that he's not the right fit. And I even told him, you're not even a preparer level. With the answer that you gave me, I will recommend you to study, right? Because the problem with tax is that you don't know what you don't know, right? So if you have this concept that because you have a long experience, that means you're already knowledgeable. No, it doesn't necessarily go that way. Okay, doesn't necessarily go that way. So that was the case for him, and there is so much more that we could be guilty of thinking that we know, because like we have encountered so many tax documents and we already know how to enter them. But the question is, do you have the ability to review your tax return? Do you have the ability to know why there is such a huge tax due? Do you have the ability to know why there was a tax refund? Right? And then would you be able to put yourself in a situation where you can review the tax return before a tax client? Right? If the tax client would say, oh, why am I being taxed on my social security income? Right? I thought that's already, something that I paid when I was, working. Why am I being suddenly taxed now? Can you explain that to the taxpayer? And you say, I don't know. That's just what I entered into the tax software, and the tax software calculated it for me. Can you tell the taxpayer that? No, you can't, right? You would say, not all the time, sir. There is an income threshold that will trigger for that social security income to be taxable. In your case, you earn this much, okay? And the threshold is this much. So every time your income passes this threshold, a certain percentage of your social security income becomes taxable. Okay? That's how you do it, right? So that's what we're doing here. Okay? We are learning both the how and the why, so that the goal is for you to be able to review your own work, even if you don't have necessarily an experience in an actual tax firm. And trust me, guys, when I say this, you're learning far better than someone who's already working in a tax firm as a data encoder. You're learning far more than them. Okay, so after this session, we will do a scenario analysis, a scenario wherein you'll prepare a return. I'll act as the client, and you'll explain to me the tax return, right? And I'll ask questions like, why am I taxed at this much? Why am I, I'll ask stupid questions that taxpayers ask. And you need to be able to explain it to me in a way that, I will understand, right? You do not tell me that, because your self-employment tax is taxed at 15.3%. Right? You don't tell me technical stuff. You tell me things that, hey, because you're earning purely self-employment income, and when you're self-employed, you're essentially an employer and an employee at the same time. So you're being taxed twice the rate as an employee. That's how you say it, right? You don't explain tax matters to a taxpayer the same way you would explain it to a colleague in the same industry, right? You will use language that, a non-tax professional will understand. Okay, so again, we will cover that hopefully as we go along, okay? All right, so just stick with us, okay? You will not find any better tax prep course than what we are offering you guys. So, I mean, I'm already seeing that you guys are taking it so seriously, like in the quizzes alone, you guys being so competitive. And I see questions in the email, like someone was not able to take the Wayground quiz or some technical issue. And then you guys are so quick to email. And the score's not reflecting. I see that you guys are putting so much effort into it, and that makes me feel really, really good, guys, because I'm seeing a really bright future for everyone who's here and giving their 100% best, guys. All right, so enough of that pep talk. Let's see if you got more questions. Capital loss is capped and carryover is not. Is that right? Yeah, carryover is not. So if you have like 100,000 of carryover loss, the only amount that you can claim as a deduction on the current year return is 3,000. The 97,000 is carried forward to the following year. Okay. All right. We end pretty early today. Abdul, I confirm what Chris said. This training is a real deal. I worked for an actual firm as a newbie, and I found myself doing data entry while being rushed and not having the time to reflect on what I was doing. Right. Thank you for confirming that, Abdul. Abdul, by the way, is don't know what your other name Abdul was. Hakim, right? Hakim, he's a tax preparer already in California. He's in the US. By the way, Hakim, I send you an email because I'm traveling to the US first week of September. I was hoping we can catch up. But yeah, he agrees to that because a lot of tax firms, they don't train you the way we're training you guys here in the community. Because a tax firm owner doesn't have the time to train. And not everybody is gifted with the ability to train, right? Some people are so intelligent, but they don't know how to explain things. They don't know how to put their thoughts into structure. Okay. I'm not saying that I'm that person, but I'm just so passionate about teaching. So I think you guys are lucky, if I may put it bluntly. Because reflecting on my own personal experience, I wish I had the same training when I was starting. I really do. It would have taken me so much lesser time to progress into a reviewer level, right? Are you AI? No. Yeah. So thank you guys. We'll continue to do our best. Okay. That's really the goal. I'm excited for the next 2 or 3 years of what VA will become with so many EA, right? With so many EA and so many talented preparers. I really am. I'm honestly really, really excited, especially that EA is now available in the Philippines. You guys, I know you will allot resources for it, or a lot of firms also sponsor exams like EA or CPA. So when you're interviewing for that opportunity, ask that question. Like, I'm interested in becoming an EA. Does your firm sponsor, or is it possible that we can get an opportunity where you can subsidize the training or the cost, something like that? But otherwise, what I did last time, I paid for it myself because I didn't want to be tied up on the firm. Like, I didn't want to have we call that in the Philippines, debt of gratitude, right? I didn't want to have that because it would be difficult for me to leave the firm, right? If the firm had to pay for it for me, and plus it adds so much pressure, right? If someone's paying for my study, it adds pressure. Like, I cannot take my own time, right? And then yeah, I just didn't need the pressure. But plus the fact that I was already working in tax prep, I can afford, right? Because again, tax prep is well paid, guys. It's much more it's better paid than the typical bookkeeper, okay, generally speaking. So if you happen to land a job as a tax preparer, I'm sure you can afford the exam fees. Okay. So due to work and time difference, it's a bit hard to follow with the same rate as the others, but I'm doing my best. That's okay. That's why we have the recording, guys. And we do our best to keep the recording available, or to make the recording available as soon as we are able, okay? Because we don't want you guys to like wait for a few more days before the recording becomes available. I don't like you to, I don't want to stall your momentum. Okay. So yeah, we'll keep that excitement, and tomorrow we'll cover 1099B. Okay, so please come on time because we start the quiz on time. Please prepare. I want to see new names in the top 10. Okay, I want to see new names. And yeah, before we end this week, we would have already covered all the way to capital gains. So Friday we'll cover the consolidated broker statement. Okay. All right. So time check 8:59. We're just right on time, you guys. And I feel like it was not too overwhelming today, huh? Just the right amount of information, not information overload, just like in the first few weeks or first few days. All right. So with that said, let us close today's session with a prayer from JD. JD, go ahead.
Thank you, Chris. Okay, let's put ourselves in the presence of God. In the name of the Father, Son, Holy Spirit. Amen. Dear Lord God, thank you for guiding us throughout this meeting. Thank you for the knowledge, ideas, and cooperation we shared today. We are grateful for the opportunity to learn, work together, and support one another. As we end this meeting, we ask for your continued guidance and wisdom in everything we do. Help us apply what we have learned with honesty, patience, and dedication. Bless every person here with strength, good health, and peace of mind. In Jesus' name we pray. Amen.
Right. Thank you, JD. And thank you guys again for joining us tonight. See you guys again tomorrow, same time, same channel. You guys have a good night. Bye bye.
Recording stopped.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through US bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical US taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through US bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical US taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.